Thank you for sharing your Wednesday night with me. I am JB Bryan, and we are talking about developing your own investment portfolio, your own stock investment portfolio, because you can have an investment portfolio and it can have television. It's still your art. It is still your investment. It can be, but look, some people buy cars and they have 10 cars, 20 cars. That's their investment portfolio. So an investment is anything that you find of value and you purchase it. But specifically tonight, we are talking about an asset that many of us, the majority of us, unfortunately, do not invest in stocks. But that's what AfroEconomics is all about, is broadening our base of options. Because through knowledge of different options, there comes our opportunity to learn about the different things. I remember way back when I used to do this, like, we used to do those slideshows, and I used to have a slide, and it would talk about things that stop us from making money. And one of them was just not having knowledge. Like, people invest in things that they have knowledge of. So if you don't have knowledge of it, you don't know about it, then we don't invest in it. So I just want to use this evening as an opportunity to just talk about stock investing. And as an investment advisor, and this is all I've done my entire career, you have to bear with me, because I take it for granted that everybody feels the same way. But actually, there are so many people who do not believe in the stock market, don't want to be in the stock market, do not want to even watch this video. But so I appreciate this large participation, because you are the ones who are going to get this opportunity and share the information with other people. I hope that it will pay off for you tremendously, because you're, in many cases, the people who say, I don't want to do stocks, are already investing in stocks. Where do you think they could be already investing in stocks? Through their portfolios at work. So they already have these mutual funds that have stocks in them, but they don't think that they're investing in stocks. But so we're not talking about mutual funds tonight, but we can do a discussion on that. I'm sure I've got it in the YouTube library of videos. Go check them out. I've done one on ETFs. ETFs, they're the exchange traded fund. That's a step up. That's what I focus on in my AfroEconomics portfolios, using ETFs, exchange traded funds, because they allow me to reduce the expenses that you have in your portfolio. So they make my portfolio internal expenses be a lot lower, so that when you incur the investment advisory fee, we're still outpacing the mutual funds, generally, because a mutual fund could have 5, 6. I've seen some mutual funds with 8% fees that they're charging to us. And unfortunately, a lot of those high fund mutual funds are used to focus on our community. It won't happen to a member of AfroEconomics, because what? We got the juice, we got the knowledge. We're going to ask things like that. What are the sales charges? What are expenses involved? What's the fees for that? We're going to ask that, because I'm going to encourage you to ask for that. You're going to ask for that. And many of you, many of you with members who are privy to membership are able to actually invest in brokerage accounts with my firm and don't incur any even advisory fees on top of that, because of your membership privileges. Amazing. So, and amazingly, that people have so many assets under management that they don't even have to pay for their membership, because they have enough assets under management. So it all works out when you're focusing on, how do I save and how do I get more service? The point of it, so that's absolutely nothing to do. That's just a stall to let the rest of y'all get here. How you doing now, Ron? How you doing, Marilyn? How are you? Indeed. Oh, how are you, Craig? Yes, indeed. I say, hey, hopefully look, and if I don't say hi to you, it's not that I don't appreciate you, because I do. I just know that you're shy, and I just didn't call out your name. That's what it was. So let's look at some notes that I have. I wanted to share, because when I feel like this is something that my people will appreciate, then I have to share it with you. So I'm going to go over. I want you to look at the Dow Jones components. The Dow Jones Industrial Average. When you see it, a lot of times we see it because they talk about it all the time on the news. But do you really know what is in the Dow Jones Industrial Average? So we're talking about investing in stock and developing your stock portfolio. So basically, the Dow Jones Industrial Average is a stock portfolio. Look at this. It's made up of 30 stocks. And this just says the 30 stocks in the Dow Jones. And you can Google this yourself. That's all I did was I looked and I just picked the first one that had them all listed. 30 stocks in the Dow Jones. Dow Jones Industrial Average down just over 3 points today. You know, that's not even a 1%, you know, that's the fraction of 1% drop. A good day, up 13.38% year to date. So since January, you know, these 30 stocks on average are up 13%. We got 3M, we got American Express, you got Apple, you got Boeing. You know, in essence, like Boeing, let's look at Boeing. And you see Boeing in there because you know with all of that drama that was going on, it's down 1% today. Still, oh my goodness, still up 17% for the year. Is that Boeing? Oh, go on, damn, right? I mean, and it's had some you know, challenging days. So, and it could be, I don't know when all of that went down, but it definitely was within this year, and it's still up 17% year to date. The Caterpillar, Chevron, Cisco, Coca-Cola, Disney, Exxon, Home Depot. You can see the Johnson & Johnson, McDonald's, Merck. These are the Dow Jones Industrial Average components. Think about how many times you've heard that word and you really didn't know what was in it. Would that be true, Dillian? You know, things always be like, what are you talking about, right? McDonald's, Merck, Microsoft, Nike, Verizon, Walmart, Walgreens. So it doesn't try. The point of the Dow Jones Industrial Average is to represent different industries, the industries over all of the top 10 at least. And that's a good goal for your investment portfolios as well. So let's just go into some of my tips, some of the things that I want you to think about, because we're already 11 minutes deep in it. And I want to make sure that I share my points of what I think are key tips on developing your stock portfolio. And now it's crazy because I didn't think about this point, but the first thing is that you have to set up an account. So you have to set up an account, a brokerage account. And of course, I can assist you with that if you talk with me and we set up an investment account. And definitely that is a privilege of a full service member that we do talk about setting up brokerage accounts. A brokerage account is not an investment. An IRA is not an investment. And that's probably something I hear a lot throughout my career. And I was like, how do I, do that? And you just have to take it like one by one to explain to people that an IRA is not an investment. So if you go to the bank teller and you say, I need to set up an IRA, and they sit you over with someone who's not licensed, and then they put you into whatever is available to them on that level, then they're not going to put you in a brokerage account, but indeed you have an IRA. But if you say, I want to put some stocks in my individual retirement account, then we have to set up a brokerage account and check off the block for individual retirement account. So then when you're putting away your $5,000 or $6,000 into the IRA each year, we can buy more and more stocks for your portfolio. So that's a brokerage account. You have the application, we prove your identity, you put in how much you want to put in it. So a brokerage account could be an individual account, a joint account. It could be, the IRA, the traditional IRA. It could be a Roth IRA. It could be a lot of stuff that you could have a corporate brokerage account. I'm not even going to be think about, but that all those different things, but definitely you have different types of titling for the account, but they're all still brokerage accounts that can have in them money markets, individual stocks, ETFs, mutual funds, all different types of stocks, real estate stocks, precious metal stocks, all different things based on the criteria that you set for them. Do you have any questions for you before we go on? Thanks a lot for hanging out with me this evening. I appreciate you. Let me know if you have any questions. I'm going back at it. So my first point, other than you have to make sure that you have an account that allows you to, you have to make sure that you're working with someone that's licensed to help you set that up. But this is really about, say you're just setting it up and you're just calling the 800 number, you're setting up a brokerage account, and somebody, God forbid, didn't know anything about me in AfroEconomics. I mean, seriously, who is that, right? But that they need to realize that the number one thing that you need to have when setting up your stock portfolio is time. Your goal is to build a rock solid stock portfolio, and that's going to require your time, your research, and you doing a lot of homework. And there's a lot of free educational information out here for you to fly solo and pick stocks. But what usually happens a lot is that people do some research on their own, and then they'll call me and ask me, like, what do I think? And I think that's cool too, because of course that nobody knows what you want more than you. So if you have a particular industry that you're interested in, just look at what are the key companies, the star players, who's really doing well in that particular industry that you're interested in. And then look at those names, and then you can approach your financial advisor about additional information on those, or which company in this industry would you like. And that's like after you set up a relationship, but you're flying solo, then it will just require you making sure that you do all of that on your own, getting the research, studying the company, looking at how well it's done, that particular company has done. And that's going to require that first component of giving it time. Don't just go and buy something because somebody told you about it. Please put in the time, right? And then you need to have a good stock portfolio mentality. You need to have a long-term view. And then I said I wanted you to see this chart, so I'm going to share this with you also. I'm glad I put that there, because I would have totally skipped an attempt to share with you the long-term view of what I want, and my point of why I want you to have a long-term view. So I have to show you a long-term view first. That is like my daughter's chemistry. Isn't that funny? Look, they're pulling up Aziz's chemistry. I know she's like, what? That's what happens when you let them come in. So I'm gonna pull up the long-term view, and I have it. Now I want to share it with you. I'm gonna try one more time. Here, and it is supposed to come right up there. I'm gonna do this one. Then I'm gonna, nope. Then you get to see a good look at Facebook. Then you need to tell me, oh, I did it. I hope this is working. This is our long-term view chart. So look at, and please let me know if your screen sharing is paused live. I don't know. What y'all think? Can you see it? Can you see my long-term view, my graph?
Not right now. All I see on here is the Facebook.
Oh, it's just showing the Facebook. I'm sorry, y'all. Well, what I was showing is I wanted to show you that over the last 100 years, when we looked at the chart of the Dow Jones, it was, but it was over the long term, it had gone higher. So as an investor, I want to make sure that you look at things for the long-term view. And there was a question on, do I help with research and guidance? Yes, as your investment advisor, when you're under contract with me and I'm your investment advisor and have the privileges of, and that is part of the financial planning privileges of AfroEconomics. Yes, I do advise you on your stock choices, your help, anything that you need, any question that you have that you need. I am your investment advisor, and that's what I do. I am here to work for you, not to work for any particular product. I focus on you. That's what registered investment advisors do. But even if you came to me with a real estate project that you were thinking about investing in, I can give you advice on that as well as these individual stocks. And of course, that is my background. So good question. Thank you, Ms. Smith. Ms. Smith is like, nah, it's on the Facebook page. I was crazy, right? I don't know. Let's look. I'm gonna try to show you the chart again because I'm gonna be mad. There it is. I know I got it this time. So okay. So this is the chart of I did over the last 100 years. This is of all years. And it shows, this is the Dow Jones. And this is the long term. But look at like these periods in here where you'll see like it was this low. And then let's say, oh, you can't see, I'm not even pointing. But here it is in 1953 at 2,600. Look at that. 1982, do you know how bad that day was? Look, it was at 2,600. And then look how high it was. It was up to 47. Look, it had got up to 6,000. Whoa, 82. I had a sister graduated from high school that year. Wow, look, that was bad. My parents weren't into stocks, so it wasn't really getting to know. But that was like probably all over the news. I wasn't even thinking about it. And look, I didn't finish college until later. I started the firm in '95. But I was like, we're not really thinking. This is the point, like thinking the difference between what your children and their thought processes will be, and because we unfortunately do not think about the market. But look. But what if they got in? This is 53, and they stayed in. Look at this, higher than ever. But look, somebody gave up in 82. And they said, "No, I'm not retiring yet." Boom, and then look, this was bad too. Somebody was unhappy that day. Like, whoa. And then we're moving forward. Look at this, 26,000. I remember one time in my career, like 20 years ago, this lady, she happened to be an attorney, and she was telling me, and I was taking her to lunch, and I was, just telling her about all the wonderful things I do and how she should invest 20 years ago. And she said, this market is not going to ever go anywhere. It's over for this. It's not going to, look at this, like the last 20 years. Look at that, 16,000, up 10,000 points. I don't know how she must feel right now. She probably gave up on that negativity. I don't know, because if you can keep any thought, like you say, even a clock that's wrong is right. You know what I mean? 2 times a day or something like that. You know what I'm saying? It's like it'll be stuck on 3 o'clock, but it's going to get to 3 a.m. and 3 p.m. So I guess you could say that the market's horrible because you can always have, like, you stick in there long enough, like between here over that time, she had some times to say, like, I told you so. But over the long term. So as a stock investor, my point is that we need to have a long-term mentality. We have to really be focused on that. I don't need this money for at least 10 years, in my opinion. when we're talking about doing a stock portfolio, especially individual stocks, we need to be purchasing companies that we believe have at least a 10-year growth potential, and that they'll be fine over the next 10 years. Or even if you have to get rid of one because that goes totally wrong, that you're still not going to give up on your entire portfolio because you're in it. Like, I don't need this money for at least this 10-year or 5-year period. I love, the longer the better. Imagine if you have money and you don't even need it for your lifetime. And that's where the compounding effect of lack of reparations really impacts our community, because of not being able to participate in that American economy because there was nothing working for us for that time period. You know, for generations of our lives, there was no money working for us. There were no assets, there was no land, there was no property, because we weren't allowed to even buy it. Not to mention, you know, what was promised. So the interesting thing is that now we have to take that upon ourselves and say that I have to have a certain amount of my money that I'm making that is not for me. That is not for me. That I have to, that this is money that I want to perform for the next generation. So additional criteria that we talked about: time, having a long-term mentality, is being able to understand the characteristics of a winner, of a winning stock, a winning company, a winning investment. Knowing that they have a strong management team with a proven track record, that they hit their timelines, that they hit their projections, that they have great execution on all of their ideas, and they have a good team with that company. You know, the last week it was interesting when they were talking about the Lakers, and you know, to hear the business behind basketball, you know, was interesting, you know, because you really don't think about it, because we just think it's the players, but they're like, no, it is the business behind that team that messed up the performance of the players. So it's kind of like that you're creating a particular product, and that's the team. The team is the product. But if the people that are working, if you're manufacturing something, and the people that are putting the ingredients into the product, you know, are picking bad ingredients, you know, they're picking bad players, they're not picking people that can work together, or they're just not giving the team the motivation, the encouragement that they need. Well, that management is bad, then that's how you have to pick your stocks for your portfolio. The same, that, you know, is this company, how are they running it? How do their people and believe in them? Do you believe in them? Characteristics of, do they have winning characteristics, and determine what your winning characteristics are. And then you want to pick a winning characteristic is also like a company that has a great product line or great services, and they have great growth potential. And then having a winning characteristic would be that they do something different, that they do something unique, that they can charge a premium for, so that they can be even extra profitable, because they do what they do, and they do it so well because of this particular unique technique. So selecting companies with both good management and having a competitive advantage, a creative advantage to them, will help your portfolio be a winner. And then a rule of thumb is to have at least 10 different stocks. But what we have to really look at it is like the Dow Jones makes it a goal to have something that's in energy, something that's in materials, something that's in a company that's in industrials, something that's in consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunications, utilities. You know, they have all these different industries in their portfolio, and you can do the same, unless you're like, I don't like that particular industry. but you want to have one or two companies in different, one or two, like say you might have a couple of utilities, a couple of technologies, where, that, or you might be like me, who is really a lot, I'm heavy technology driven, or you might be, well, you like a lot of healthcare, like my daughter really likes healthcare, and believes in it, and gets into this bioengineering and everything. It'd be interesting to kind of introduce more biotechnology companies and information to her. But because there is a future there and it's really expanding. So thinking about what are the winners there, who are the companies there. So having a diversified portfolio in your stock portfolio is beautiful, because having the diversification basically helps you lower the risk of the your portfolio, because you're hoping that you'll have industries that will complement each other. And if one is weak, the other one will be strong at that particular time, and you'll be able to stay on your long-term mission, right? A fifth point is that you have to use common sense. That we want to say that it's, highly technical and you can just look it up, and, but a lot of the times when you look at things, like this is the best stock of the year, really, in many cases, it's backed by an advertisement, or they paid for that exposure, they paid to be there. And sometimes often, they're much better bargains for you. You might look up like this, is the best, and based on some criteria that they have. So you have to find out what that best is based on. Yeah, because it's all relative, but you have to determine what your best. So we have to really focus on that good common sense that we do have, so that we can weed out the losers, weed out the stuff that doesn't look right, doesn't feel right. Right. So all of that, even realizing that there's, certain industries are going to have more behavioral finance impact. The market will, or they'll have more litigation involved in their industry. So realizing that they might be in an industry that's going to, be sued a lot, or if you want to do a lot of cannabis, you have to realize all of the limitations and the legalities, and where is the future of this? Is it, it's still so caught up. So just realize what that requires of you, and what that will and will not be able to bring to your portfolio. If you're seeking dividend income, is it appropriate for you to be buying something that pays out no dividend? So common sense. So, and the sixth point is to establish a respectable time frame. So don't think that your portfolio is going to double in a year, or 6 months, or or even 2 years. Just focus on, is it still well managed? Are these still performing compared to the benchmark or their industry? Like, is the industry down 20%, but this particular stock in the industry is up 5%, but you're mad because it's up 5%? So we have to, again, realize the time horizon that things take. Also, that's a very good point I was just brought up about knowing what you are comparing things to. Is it fair to compare a utility stock to a biotech stock? No, or what should the differences be? Like, how you compare them? What are you looking for from one? You might be looking for a dividend from one, and you might be looking for long-term growth from another, realizing what you expect from each individual stock. And then know yourself. Know, most importantly, do you have the time to develop this stock portfolio on your own? Do you have time to do the homework? Do you have the temperament that is required to go out here and to check out all that is required so that you can say, I know that this is good and I can stick by this. You know, it's because a lot of times if you don't put in that work and things go down or the market becomes volatile, if you don't have everything invested in that, like, I mean, as far as invested in like your heart, that you really did the work and you know the basis of each decision, then you will give up and you will sell your portfolio and not be able to gain those long-term returns that you could possibly gain based on historical performance. So that I think that by being thorough and and for some people will be that I'm not that person. I would rather hire someone else to help you. Well, there's advisors like me who do help people develop them. But if you decide you want to do this, you want to fly solo, you have to, just be willing to take full responsibility for this aspect of your financial life. You might have where I'm doing this on my own, but I need help with, this other portion of your asset base. And that's fine too. But just know yourself. Any questions before y'all? I'm sorry, got in there. Sure. Mr. Bozeman asked, with all the stock buybacks, are you looking at some false matrix? It totally depends, but there's a lot of false stuff. But a stock buyback from a company is when the company comes and they want to help their stock price, in many cases, increase their stock price. So they're going out and they're buying it back up. There's a reason that they want to have their stock back. And generally it's because they don't like the price in the market. So they want to, or they like the price in the market because they know it's undervalued and they're going to buy it because they want the benefit of when it comes back up and it's at a great low price for them. And they have the cash to acquire their stock again. So how we determine what is false and what is that, or because of company actions, can company actions create something that's not really real? Well, as long as they're doing what is legitimate and as long as it is a company that is regulated by the Securities Exchange Commission, that should just continue to ask for more and more information, even directly from the company. But that's not to say that there are some companies that have provided misleading information to the regulators, but you could at least feel a lot safer with making sure that it is at least a regulated company. And that will be a company that is traded on an exchange, would be regulated, indeed. It's also a question about penny stocks. What are penny stocks? And that's just a term to use for company stocks that are inexpensive. And they might not be pennies, they might be a couple dollars, but they're still very inexpensive. They're very low in price. And some of them do have historical performance. Some of them are from companies that are making monies, but often they're from companies that are not are really well established yet, but they are public. They're a publicly traded company, and they're providing, if it's a publicly traded company, and they're providing information to regulators and providing audited financial information. But just because something is cheap doesn't mean that you have to buy it. And that's what we need to be careful about. $100 is $100. So if you buy $100 of 100 shares of a $1 stock that goes to zero, and you buy 1 share of a stock that is 100 and it goes to $110, then even though you only got 1 share of the $100, you still earned money. Now, it would be great if the other one went that way, but just don't think because you have 100 shares of something that means, that's the keys to success. And stock price in many situations doesn't tell you everything. tells you, you know, not that we have it's stock, that's a stock price, but relative to what? We want to look deeper into the management, the earnings, the historical performance, look at the fundamentals of the company, the product they provide, how their competition. You got a lot you got to check out. But very, very good questions. Very good questions. Did that help, y'all? Did that help? But remember, the first thing you got to do is open up that brokerage account. Then you got to commit the time. Then we got to do that research. Then you have to know which industries you want. And for a well-diversified portfolio, I think somewhere between 10 and 15 is enough. But I've seen some people say, you know, 30. That's how many there are in the Dow. But, you know, is that easy for an individual investor? Well, you know, depends on how much money you have, right? But this is a good discussion. I hope that you enjoyed it as much as I did. I mean, we could definitely spread this out over like an entire year for a class, but I wanted to make sure that I did this because, you know, we talk a lot about a lot of things, and a lot of times I don't talk about like what I really do. So this is what I do. And don't ever hesitate to email or call me to get information on the investment, on the AfroEconomics portfolios, or also on just buying your individual stocks. And we can develop that as well. Yeah. So, and all of it's according to what your risk tolerance too. So getting to know your risk tolerance is one of the first things that we do as members of AfroEconomics. So another question from you. Oh, thank you. Thank you. I appreciate you all so much. I appreciate you. Thank you. I am JB Bryan, President and Chief Investment Officer at JB Bryan Financial Group, the home of AfroEconomics. So definitely make sure you reach out to me, JB at jdbryan.com or JB at AfroEconomics.com. Thank you. I'm doing the Soul of Your Money on Sunday morning, sunrise. The members only meeting Friday morning.